Good morning. Today we will discuss on the topic that is depreciation. So, starting with that what is depreciation. In this topic we will discuss first of all what is depreciation. Second, we will discuss why is it charged, and third we will discuss the methods of charging depreciation, and the fourth point we will discuss the manner in which the depreciation is charged. So, starting with the first thing, that what do we actually mean by depreciation? Depreciation is diminution. Diminution means decrease in the value of capital asset, either due to its use or lapse of time. Now, if we look at the keywords into this definition, first is depreciation is diminution. Diminution is the decrease. Second important thing is in the value of capital asset. Okay, depreciation holds true only for capital assets, not for all assets. Okay, because assets, as far as the asset is concerned, if we have to define asset, what is asset? Asset means anything of use and that belongs to the organization. Anything of use that belongs to organization, that is asset. Now, for instance, we buy a machine in order to produce something. Now, that is an asset. How? One thing is that this machine is of some kind of use, it can be put into some kind of use, that is to produce something, and at the same time we have bought this machine, that is anything of use and belongs to the organization. Okay? So, that is why it is an asset. एक ਤਾਂ ਅਸੀਂ ਉਸ ਚੀਜ਼ ਨੂੰ use ਕਰ ਸਕਦੇ ਹਾਂ for any productive purpose. Second point is that the ownership title lies with the organization. It has been owned by the organization. We can have a machine in two ways. One is either we can buy a machine or we can hire machine. Now, in the later case, if we hire machine, then it is not an asset of the organization. Okay? So, that is the meaning of asset. So, depreciation is diminution in the value of capital asset. Capital asset, again assets are of two types. One are the fixed assets, these are also capital assets, and other are current assets. Now, capital assets are those assets in which we make an investment that is of a kind in which there is a spending of huge amount of money at one point of time and its benefits are extended over a longer period of time in future. Now, that becomes a capital asset. For example, let us say we buy a machine. Now, let us say we buy a machine in the year 2013. We would continue to draw benefits out of this machine. ਅਸੀਂ ਇਸ machine ਤੋਂ benefits ਲਗਾਤਾਰ ਲੈਂਦੇ ਰਹਾਂਗੇ, not only in the period in which we have bought, but in the period over that is a longer period of time in future, maybe for next 10 years. Now, such kind of assets, maybe our machinery, our plant, our furniture, equipments, okay, all such kind of assets are the capital assets. So, whenever we talk the concept of depreciation, that depreciation is applied on capital assets. Now, another important thing is that there may be depreciation of the capital asset, that is diminution in the value, either due to its use, that is continuous wear and tear because of its use, or lapse of time. it may be either due to its use or may be due to lapse of time. So, या तो उसकी wear and tear हुई, उसकी value घटी because of its wear and tear, because of the continuous use, or depreciation may be there due to lapse of time. Let us say we buy a car today, for instance, let us say in 2013, November 2013. Even though we do not run it for a single mile, we will not get the same value next year, that is November 2014. Now, here in this case, इस चीज़ ਦੇ ਵਿੱਚ ਕੀ ਹੋਇਆ, depreciation has taken place, the value has been reduced of that capital asset, not because of its use, but because of lapse of time. Similarly, things becomes obsolete. When things becomes obsolete, outdated, in that cases also there is a depreciation, there is a diminution in the value because of obsolescence. Now, that obsolescence is again related to the outdatation, that is lapse of time. So, depreciation in this definition, there are 4 keywords. One is the diminution, second is the capital asset, third is use, and fourth is lapse of time. So, this is the meaning of depreciation. Another important thing is that this depreciation is charged on the useful life of an asset, on the useful life of an asset. Now, asset may have different types of lives. One life is economic life, economic life. That is basically life in years, for which an asset is put into use for its primary purpose, Now, that is economic life. Now, second is useful life. Now, in useful life, definition is same, the former part is the life in years for which an asset is put into use instead of primary purpose. Now, this becomes primary as well as secondary purpose, primary as well as secondary purpose. So, that is the only change. Now, what is the meaning of primary purpose and secondary purpose? Now, as far as this primary purpose is concerned, for example, let us say we have bought a machine for what purpose? For the production of some goods. Now, as long as we are putting this machine into use for producing the goods, it means it is being used for the primary purpose. जिन्नी देर तक असी उन्होंने production वास्ते use कर रहे हैं, that is primary purpose. Now, due to some wear and tear or maybe due to some obsolescence, now what has happened that this machine is no more economical to put into use for its primary purpose, but still we have not given up this machine, पर ऐसी ये इस machine को छड़या नहीं है. Now, this machine is used for the secondary purpose. This secondary purpose is, let us say now this machine is used for the training of the people. Okay? Now, in that case, as long as this machine is being used for the training of the people, even though this machine has expired its economic life, but still this machine is holding its useful life. So, as long as this machine is being, this asset is being put into use for its primary as well as the secondary purpose, that is known as the useful life. And other is the total life of the asset. Now, in case of total life, that is the life in years or number of years from the date of its original acquisition to its final disposal or final abandonment to scrap. Now, that is the total life. Now, here you may distinguish that an asset may have three types of lives: economic life, useful life, total life. Now, the asset might have expired its useful life, but this still asset is not written off from the books of accounts. Okay. It has not been abandoned, it has not been written off, it has not been abandoned to scrap. Okay. So, out of these three lives, now which life we take into account for calculating depreciation or for charging depreciation? Because rate of depreciation in the next slides we will see that how the rate of depreciation is calculated. Rate of depreciation is calculated on the basis of the expected life. Now, that expected life is basically the useful life of the asset, is the useful life of asset. So, that is very important point, that which life we take into account for charging depreciation, it is useful life. Now, another important thing is, third important aspect is, it is a non-cash expense. Now, depreciation we charge, it is a book entry. Now, it is a kind of expense, it is a kind of cost in which there is no cash outflow, it is just a book entry. Tangible cash does not flow outside. Okay. So, that is why it is known as non-cash expense. ਇਹਦੇ ਵਿੱਚ cash ਬਾਹਰ ਨਹੀਂ ਜਾਂਦਾ, ਸਿਰਫ ਅਸੀਂ book ਦੇ ਵਿੱਚ ਆਪਦੀਆਂ books of accounts ਦੇ ਵਿੱਚ ਇਸ ਦੀ adjustment ਕਰਦੇ ਹਾਂ. Fourth point is that it is different from depletion. It is different from depletion. Now, basically what is depletion? Now, in case of depletion, basically this is the diminution, it is again diminution, it is the diminution of resource base due to continuous extraction of natural resources out of it, Okay. For instance, we say land has been depleted due to continuous extraction of, let us say, water out of it. Okay. So, that is depletion. So, here there is a depletion of the resource base, land is a resource base in that case, and we are extracting natural resources out of it. Okay. So, depreciation, this is how the depreciation differs from depletion. Now, second question is, now this is the meaning of depreciation, that depreciation is the diminution in the value of the capital asset, either due to its use or due to lapse of time. It is charged on the useful life of the asset. Considering the useful life of the asset, it is a non-cash expense and it is different from depletion. Now, this is the basic understanding about the depreciation. Now, second important aspect is that why is it charged? There are number of reasons, but the prominent reasons are these two. One is to give a true picture of assets in the balance sheet, and second is to make provisions for the replacement of assets. Now, let us understand what is the meaning of this. Now, first thing is, what is balance sheet? Now, assets are recorded at their historic values in the balance sheet. Now, let us understand what is this. Now, basically balance sheet is one of the statutory statements that is made by the organization every year. There are two types of two statutory statements. One is income statement, or you can say profit and loss account, and the second is balance sheet. Now, this income statement is made for a period, let us say that is usually a financial year. Let let us say 2013-14. Basically, it tells about the operational efficiencies, that whether there have been profits or losses. Okay. And this balance sheet is a statement, it is basically an account, that is why it has a debit and credit side. As far as this balance sheet is concerned, it is a statement, and from this statement or account it differs. First thing is, it is prepared as on date, that is the last day of the financial year. So, that is usually 31st March of any financial year, okay, say 2013 for instance. Second thing, it is not an account, it is a statement. So, this profit and loss account is prepared for a period, it is prepared as on a particular day or date. Second is, it is a statement, and the statement of two things. On one side we have assets, on other side we have owner equity and liabilities. Now, basically this is the balance sheet as on any particular day. Now, assets here in the balance sheet are recorded at their historic values. Now, for instance, let us say we have bought any machine of 5 lakh rupees for instance in the year, let us say 2010 for instance, year 2010, and expected life is, let us say 10 years. Now, this means that machine is being depreciated at the rate of 50,000 rupees per year, that is 5 lakh divided by 10 years. Now, when we prepare the balance sheet in 2013, then this asset is shown at its historic value, that is again in the balance sheet of 2013, this machine is again shown for 5 lakh rupees at the historic value. Now, this machine is shown at the historic value, actually its value is not 5 lakh rupees, because we have extracted benefits against it, and this machine has been depreciated, let us say in 3 years to the tune of 1,50,000 rupees. Now, here it is the 5 lakh rupees. Now, we make, now this is misleading. So, here we have the total value of assets, total of asset side, let us say XXX, and here on total on this side, it is a balance sheet. So, this total matches, total of asset side matches with that of owner's equity and liability side, and ultimately we have this accounting equation, assets is equal to owner equity plus liability. Now, this means that for any asset in the organization, either the owners have the claim over the assets, owner's claim over the asset is known as owner equity. उन assets ਦੇ ਉੱਤੇ ਜਾਂ ਤਾਂ owners ਦਾ claim ਹੈ ਜਾਂ outsiders ਦਾ claim ਹੈ, ਜਿਨ੍ਹਾਂ ਤੋਂ ਅਸੀਂ ਉਧਾਰ ਤੇ ਕੋਈ ਬਾਈ ਚੀਜ਼ ਕੋਈ ਖਰੀਦੀ ਹੈ ਇਸ ਤਰੀਕੇ ਨਾਲ. So, over these assets, either the owners have the claim, that is known as owner's equity, or outsiders have the claim. So, that is why this asset side equals the owner equity and liability side. Now, in order to give a true picture of assets in the balance sheet, we make an equitable adjustment in some other asset. Now, that is cash for instance. Now, what happens, let us say our profits before depreciation as shown by the income statement. Income statement is basically, on one side we have revenue, on other side we have expenses. So, if revenue exceeds expenses, then there are profits. Now, profits emerge in the form of tangible cash. Let us say the profits before depreciation etc. have been generated, let us say 1 lakh rupees for instance. Now, that means we have received, let us say this 1 lakh rupees have been emerged as that our revenue, our receipts were 4 lakh and our expenses were 3 lakh. That means, we actually received 4 lakh rupees in this year and spent 3 lakh rupees in this year. That is why we have a net cash of 1 lakh rupees. Now, we charge depreciation. When we charge depreciation, let us say of this machine, annual depreciation is 50,000. Even though this cash has been generated to an amount of 1 lakh rupees, but here we actually show 50,000 rupees. Okay? And these profits belong to whom here on this side? Let us say earlier cash was x, now 50,000 rupees have been added here. So, this x plus 50,000 rupees. Now, here these profits belong to whom? People who share the risk of the business. Now, these are the owners and these profits will be added here to the owner equity. So, that is x plus 50,000. So, actual cash generation was 1 lakh rupees, but by charging depreciation, which is a non cash expense as we have disclosed earlier, we are showing it 50,000 rupees and the same amount of profit is added to the owner's equity to 50,000 rupees. Okay? So, against the cash generation of 1 lakh rupees, we are showing it 50,000 rupees. We have made an equitable adjustment that were supposed to be made here, and ultimately we reach the situation here that the total value of assets, that is x plus 50,000, is not misleading. So, this is the first reason for which we are charging depreciation. Now, second important thing is, now what is the other reason? Now, this difference of 50,000, that is 1 lakh minus 50,000 for instance, that is 50,000. Now, here this amount of money is kept preserved for the replacement of asset on the expiry of its life. For instance, after 10 years, let us say in 2020, because it was originally acquired in 2010, then in 2020 this asset will expire its life completely. Now, we can make use of that amount, that is the balance here, okay, 50,000 per annum. So, again we have accumulated 5 lakh rupees to replace this machine. So, that is the second reason. So, first is assets are recorded at their historic values in the balance sheet, as we have shown 5 lakh rupees. Then depreciation is charged to make an adjustment in some other asset, that is cash, to give overall true picture of assets in the balance sheet. Now, next point is that basically this, yes. Now, then second reason is to make provision for the replacement of the assets. Then this amount, that is the balance amount, depreciation amount, is basically used for the replacement of assets on the expiry of the life of the asset. Now, there is one question which might be in your mind, that after 10 years, when we would be thinking to replace the asset after 10 years, at that time that asset may not have the same value, that is 5 lakh rupees. By that time that technology might have become obsolete, there may be the new variants and that may cost more than 5 lakh rupees. We will come to that point also in the next slides when we will be discussing methods of charging depreciation. Now, let us come to methods of charging depreciation. So, there are two main methods which are prominently used. One is straight line method and other is reducing balance method or written down value method, WDV method. Now, let us look at the straight line method. Now, in case of straight line method, it is very simple and easy to use. That is historic value of asset divided by expected life. That is the general formula. Okay. Historic value of asset divided by expected life. Now, for instance, let us say we buy an asset for rupees 5 lakh and expected life is let us say 10 years. Then our annual depreciation it is 50,000 rupees. Now, this annual depreciation, that is 50,000 rupees, will remain uniform throughout the life of the asset. Okay. It will remain uniform throughout the life of the asset, and on the expiry of the life of the asset, the value of asset will reduce to 0, reduces to 0. So, after 10 years, the value of the asset will reduce to 0. Now, this is a straight line method. So, that is a historical value of asset divided by expected life in years, that gives us the annual depreciation. Value of asset reduces to 0 on the expiry of life of asset. And third important thing is that depreciation amount is uniform. Now, coming to the next method, that is written down value method or reducing balance method. Here in this case, we have WDV method, written down value method. Now, we have a fixed rate of depreciation, based on the expected life, that is 10 years for instance. So, if it expected life is 10 years, then this rate becomes 10%. Okay. So, annual rate of depreciation, that is 10%. Now, this fixed rate is charged on the residual value of the asset, For instance, let us say value of asset initial, that is 1 lakh rupees. So, at 10% in the first year, it is 10% of 1 lakh, that is 10,000. Next year, this 10%, now this is a fixed rate of depreciation, this 10% rate will be charged on the residual value. Now, residual value is 1 lakh minus 10,000, that is 90,000. So, 10% of 90,000 is 9,000. And third important thing is, now next year it will be 10% on 81,000, that is 8,100. Now, comparing with the straight line method, here even though there is a fixed rate of depreciation, but depreciation amount is not uniform. In that case, depreciation amount was uniform throughout the life of the asset. But here in this case, depreciation amount is not uniform. It is the highest in the first year and keeps on decreasing in the successive years. So, that is the noticeable point. Comparing with the straight line method, in the straight line method, the depreciation amount is uniform throughout the life of the asset, but here in this case, in the WDV method, it is the highest in the first year and keeps on decreasing in the successive years. And next important point, that is again the point of differentiation, if you compare with the straight line method. In the straight line